What's up, everyone? It's been a while, and today it's gonna be a pretty special episode. It's gonna be about quarterly shift and Ipda data range and open float. Okay, let's do this. Quarter shift. Okay, Ipda data range. Ipda data ranges and open float. Well, so yeah, these concepts, I believe it's one of the hardest concepts throughout the entire mentorship ICT core content, as I believe so in my own perception. This is why I've spent like a pretty great deal amount of time stuck in here trying to understand this, and I think that now I can just cover about 70 to 80% of the whole picture about this concept combined. Yeah, so that's why I said it's special. First of all, it's been a long time since I posted my last video about the high time frame fundamental stuff, and today we're coming back with this bunch of knowledge. Yeah. Okay, so starting off from quarterly shift. What is a quarterly shift? Basically, ICT believes that every 3 or 4 months there will be a shift in the marketplace, right? There will be like a shake-up. If it's bearish like this, it can just be like consolidating, right? Or it can retracement back, or it can be a whole reversal. We don't know, but we just actually know that every 3 or 4 months there will be a shake-up in the market. There will be some intermediate term move in the market, right? In terms of 3 or 4 months time horizon. Well, in some videos he says about 3 or 4 months is like a long term for him, but like in some videos he says about like in this video specifically, in this month 5 ICT core content, he considered this as an intermediate term move, but I don't know, who cares about it. We just know that every 3 or 4 months there will be a shakeup in the market, and we can participate in this move. How? Starting off with quarterly shift, every 3 or 4 months the market will have a shakeup. For example, looking in this market, it's the dollar index. So in the last 3 months, what is the most visible market shift that you can see in the chart right now? It's this one, right? It's this one. Why do we have to come back to the first day of that month? The shift started at May, roughly May, and then we have to come back to the first day of that month. Because why? Because the Ipda data range, okay, we're not going to mention about Ipda data range now. We're just going to leave it for later after the quarterly shift part. But the Ipda data range is basically a computer data, like the algorithm inside of this market. It can't see this market, okay? It will use a point of data like this vertical line here anchoring at this data. It will look back to the first day of every month starts, okay? And it's going to use this as its point of data, to cast forward, to look back and stuff. Okay, so coming back to the quarterly shift, this starting off from May, it was a bearish shift, right? So the market has been shifted bearish, and it has been moving bearish for 3 months. So coming back to quarterly shift, what is the quarterly shift about? Every 3 or 4 months there will be a shake up in the market. Okay, let's see. So starting from, this is May, so here this is like August. Let's see what happens. Okay, the market starts to consolidate, right? Consolidate starting from August. Okay, so what is the next quarter? The next quarter is going to be in November, right? Every 3 or 4 months. But yeah, a small reminder here, as I have conducted myself inside of the market, I back tested it multiple times, and ICT also mentioned about this. Sometimes it will be like 2 months, okay? So ICT mentioned about like the market condition for the last 2, 3, or 4 months will not exactly be the the likely next market condition in the next 2, 3, or 4 months. So he just like sneak in the 2 months range inside of that. So I myself back tested it, and I have just saw it like I saw it like very frequently, that the market also shifts every 2 months also, right? But like the most frequent is like every 3 months, okay? Or occasionally it's going to shift every 4 months, but sometimes 2 months is okay to expect a shift inside of the market, okay? It doesn't have to be like the exact 3 months. Like there's not going to be like exact price. Okay, so starting off from August, the next quarter we're going to expect the next shift is in November, right? August, September, October, that's like 3 months. And starting off from November, we're going to expect a new shift. But for now, the market is consolidating. Let's see. In November, what does it do? It shifted bearish again, right? So in November, what is the next quarter? So once we have one quarter here, we're just going to mark out the next quarter. Sorry, I'm kind of sick right now, as you can clearly hear it in my voice, but the grind never stops. Okay, so it's bearish, and what does it happen next? The next 3 months, it starts to shift bullish, right? Look at that. But yeah, to be exact, this shift started from here, so it's gonna be like 2 months after the last shift. As I've said to you, 2 months is reasonable to expect a shift, right? So it shifted from January. So what is the next quarter? 3 months is going to be about the 1st of April, right? Look closely. Look, the market starts to shift bearish, right? So price is like, I can do this over and over again. Price is just like, well, sometimes price will offer like 6 months of just like straight bullish or bearish, just like that, or 6 months of consolidating, right? And sometimes just going to be like not, it's the market will not offer a very clear price. But as you can see in this range of data, price has shown like pretty crystal clear about the quarterly shift concept. Every 3 or 4 months there will be a shakeup in the market. Every 2, 3, or 4 months. Okay, sometimes I'm just gonna say 2 months there, but because sometimes, as I myself have witnessed it pretty frequently, it shifts every 2 months also, but not like that frequent like 3 months. Okay, so 3 months is our just like our benchmark. So what does it help? Why does it help? Quarterly shift. First of all, it helps us to not marry a bias, like not marrying a bias. For example, we're bearish here, so as the new quarter starts, we're just gonna expect like it's not gonna be bearish, right? The market can't just like move in like straight line. If we're not having this concept, not having this idea, we're just gonna keep marrying the bias that the market will just keep being bearish and not gonna return back. We're not gonna like having a shake up, right? The market doesn't just like trade in one line like this and never gonna return back, right? So first of all, it helps us to just like be aware of the market condition, be aware of the next shift, and it helps us to define our direction. Okay, for example, it's bearish here, just gonna consolidate, and then when it shifted bearish again, we know that for the next 2, 3, 4 months, it's just gonna keep being bearish, right? And when it shifted bullish here, what is the direction likely? Of course, it has to couple with other fundamental, of course, like we compare it with other market analysis. It's called intermarket analysis. For example, we're looking at the US dollar index here. We're just gonna look at the bond market or the commodities and some stuff like that, and comparing S&T with the EU, which with the pair that it's just like highly correlated with, to locate the smart money concept and stuff. But we're not going to mention about that. But quarterly shift alone, it doesn't help much, right? It's just like a roadmap for us. Of course, we have to couple with other factors also. But as you can see, as price pushed up, it shifted bullish. What is the next potential direction for the next 2, 3, or 4 months? Bullish, right? Okay, so quarterly shift helps us to dictate the bias, whether or not it's going to be bullish or bearish, or it's going to be stuck in consolidation, and helps us not bearing a bias. That's it. And let's move to the next part, which is Ipda data range. What is the Ipda data range? I think Ipda data range and open float is like the hardest. It's the part where it's just make us every certain individual who has gone through the core content and mentorship may start to have just like yeah, pretty like an obstacle here, especially if the data ranges and open float. It's the concept that can easily make a trader, make a learner, make a person who study all these concepts being stuck, right, for like a great deal amount of time, I'm telling you. But yeah, today I've realized this, and I'm happy to share with you guys, of course. So if the data range, what it actually helps is, for example, every month starts, okay, every month starts, we will have to look back 20, 40, and 60 days, okay? So if the data range, it's solely about the computer program, it's about the algorithm of the market. Where are the buy stops and where are the sell stops that the market is going to go towards? We're not talking about the direction yet, yeah? We're talking about the Ipda data range. It's gonna go back to the liquidity or reference points, institutional reference points like order blocks, fair value gaps, highs and lows, and some stuff like that in the last 20, 40, 60 days of every first day of the month, okay? Every first day of the month, it's just gonna look back 20, 40, 60 days, okay? So coupled with the quarterly shift, for example here, we shifted bullish. So starting off from this month, we shifted bullish. So are we gonna target the highs or the lows? The highs, right? So what highs? What kind of highs? The highest high in the last 20 days, 40 days, and 60 days, right? So yeah, let's do this. This is looking back from this quarter. I'm just gonna delete all these vertical lines so that it helps us to look more easily. Okay, so for example, we cast out. Wait. We're gonna cast out 20, 40, and 60 days. Okay, what is the highest high in the last 20 days? It's this one. What's the highest high in the last 40 days? It's this one, right? In the last 40 days, it's this one. What's the highest high in the last 60 days? It's this one, okay? So from this point, the Ipda data range has just received the data points. It received the information. Oh, it's like, it's looking back. It's like, oh, in the last 20 days, what's the highest high? Oh, it's this one. Now I'm gonna go for this one, okay? It's gonna look back. What is the highest price point in the last 40 days? Oh, it's this high. Now I'm just gonna go to this mother MF, okay? Sorry for swearing. What's the highest high in the last 60 days? This one. Now I'm just gonna go for that one. But look closely. Every new month starts, we have to look back 20, 40, 60 days. So we have to know for a fact that every new month starts as price having new candles, new months, new weeks, and new days. Every of these lows will become potentially expired. Understand? Like for example, this is the point where we look back 20, 40, 60 days, right? Starting off from this month. But what about we're here, right? If we're here, where's the new month just start? Where did the new month just start? Here, right? So from here, we're gonna look back 20, 40, 60 days. Okay, so what is the highest high in the last 60 days? It's this one. Okay, it's not this one anymore. This high has been expired, right? And it's not gonna just, it can't see this high anymore. The algorithm, it can't see this high anymore. It's just gonna see this high and this high and this high. as new day starts, like new trading day starts, and prices like having new movements, it will start to look back 20, 40, 60 days and locate those liquidity points. And coupled with the direction of the market, what is the direction? It's bullish. It's going to aim for the highs. What highs? The highs in the last 20 days, 40 days, and 60 days, starting off from the new calendar month start. Got it? That's all about this Ipda data range and quarterly shift. But remember, we're not going to marrying this bias bullish for so long, because as we mark out 20, 40, 60 days, all right? Okay, I forgot to mention this. We mark out 20, 40, 60 days in the past, right? And each new month starts, we mark out also 20, 40, 60 days in the past, okay? So we're just talking solely about the look back period. Now, ICT also mentioned about the look forward, okay? Each data range is looking back and looking forward. So this is why it's just like more complicated. So looking back to see where are the liquidities, right? But looking forward to expect a new highs and lows will be formed in these range. For example, coming back to this quarter shift, it shifted here and we're here, right? We're just going to cast forward 20, 40, and 60 days until the new quarter starts, okay? And then we don't mark out 24, 60 days anymore. But we expect a new highs and lows forming in the range of 20 days, in the range of 20 days on the right hand of this vertical line, okay? On the right hand of every new month starts. 20 days, 40 days, and 60 days, new highs and lows will be formed. And all these highs and lows forming will be the next potential liquidity points to target in the market, okay? Got it? Okay, so for example, as this month starts and we started to shift bullish, we mark out 20 days, right? 40 days and 60 days to expect a new highs and lows form. And when new highs and lows form here and the new month starts, for example, this highs and lows formed in the next 40 days, right? And this new month starts, we also can look back from here. What is the highest high and the lowest low? Got it? And these are just going to be the points where the market targets, okay? So I think solely it's going to be about looking back. Looking forward to just like, yeah, we don't have to cast back anymore, because when we look forward like this, and in the future we're going to use all these data points, all these vertical lines to look back 20, 40 days in the past to see what is the highest high and the lowest low. It's the same. Okay, it's the same with Ipda, it's the same with looking back. So yeah, okay, that's it. That's all about the quarterly shift, Ipda range, and the open float. Open float is about, so open float basically when the market shifted bullish, and whenever it retraces back lower, it gets punished right away, and it shifted bullish again, right? Look at this. After it retracing back, it displacement up higher, and this indicates what? Indicates the market wants to seek highs, right, instead of seek lows. Institutional order flow is bullish. That's it. That's all about open float and Ipda data ranges. Okay. I'm starting to sweat a lot, and I'm kind of sick right now. Okay, I think I'm just gonna stop this video. Okay, hopefully this video help you to just like enlightening your understanding about this concept. Okay, wish you luck.